Thanks for joining us at XM.com for this Forex Preview video. We'll be having a look at U.S. consumer and producer price figures due on Wednesday and Thursday. I'm Cristina Marujos. Joining me today is Rafi Boyajian, Senior Investment Analyst. So, Rafi, this is the main release out of the U.S. this week, but I do get the feeling that the overall warring economic climate will likely overshadow this report due to the coronavirus, of course. Now, what is expected in this data, and do you think it will solidify an aggressive rate cut by the Fed next week?
Well, you're right about the coronavirus outbreak pretty much dominating all the headlines, and of course it's at the forefront of policymakers' minds. So the data we're going to get now will likely be seen as outdated because what's happening right now with this epidemic, it has pretty much changed the entire economic outlook. So what happened in January and even in February isn't likely to have much of an influence on policy making. But nevertheless, given how elevated inflation was at the beginning of the year, Fed will probably still be keeping an eye on both the consumer and producer price indexes coming out this week. So the consumer price index, although the Fed doesn't actually target that for its inflation goal, it's still the broadest measure of inflation in the US, so it does have some significance, and it was at 2.5% in January. That was well above the Fed funds rate at the time, and now following this emergency rate cut, we are seeing real interest rates being even more negative in the US. So if we do see, as expected, some easing in both the consumer and producer price index in the headline rates, at least in February, that would probably make it easier for the hawks within the Fed to go along with more aggressive rate cuts in the coming months. Now the core rates, both in the CPI and PPI, are forecast to remain steady, but overall, especially even now after that crash in oil prices, the inflation will probably start to head lower, and that would make it even easier for central banks to make further aggressive rate cuts.
But what about the dollar? Because we've seen it come under extreme pressure the last few weeks. Dollar-yen was especially tested. What is the short-term outlook for the greenback?
Well, we did get a rebound in dollar-yen overnight. That was mainly on the back of speculation that we're seeing some movement among major governments and central banks in terms of providing more fiscal and monetary support. We had President Trump yesterday making a public address in the US where they're considering various proposals for cutting taxes, such as payroll taxes, at least temporary ones, that would help both workers and businesses cope with this crisis. And of course, the Fed is expected to cut rates further. So that helped the dollar make a bit of a rebound, and on the back of rising treasury yields. But given the fact that outside of China, other countries are far from containing this virus, we're likely to see more downside for dollar-yen in the short to medium term.
I see. Rafi, thank you for joining me today. And thank you for watching this Forex Preview video here at XM.com.